Picture this: early 18th century France, a kingdom reeling. The Sun King, Louis XIV, had left behind a legacy of grandeur, yes, but also a crushing national debt, absolutely massive for its time. We're talking billions of livres, an almost unimaginable sum. The treasury was empty, the tax system broken, and the entire nation was teetering on the brink of financial collapse. This wasn't just a budget problem, it was an existential threat to the French monarchy and its people. Something radical had to be done, and fast. Into this crisis stepped a man unlike any other, John Law. A Scottish gambler, financier, and economic theorist, Law was a charming rogue who'd fled his homeland after a duel. But beneath his charismatic exterior was a brilliant, if perhaps reckless, mind. He believed he had the solution to France's woes, a revolutionary idea that would not only erase the national debt, but also usher in an era of unprecedented prosperity. His vision? To completely transform the very nature of money. Law's core theory was radical for a time when money was mostly gold and silver. He argued that precious metals were merely symbols of wealth, not wealth itself. True wealth, he posited, lay in a nation's productive capacity, its labor, its land. Therefore, he believed, a nation's currency didn't need to be tied directly to metal. It could and should be paper. Paper money issued by a national bank would stimulate trade, lower interest rates, and bring prosperity to all. In 1716, Law finally got his chance. The Regent of France, Philippe d'Orléans, governing for the young Louis XV, was desperate. He listened to Law's audacious proposal and, against all conventional wisdom, gave him permission to open the Banque Générale. This was France's very first central bank, with the power to issue paper banknotes. These notes were initially backed by silver and gold, but the true revolutionary potential, in Law's mind, lay in their future expansion. The initial results were promising. The Banque Générale's notes were convertible to specie and quickly gained public trust. They were far more convenient than lugging around heavy coins, and their acceptance began to stimulate trade. Law's system seemed to be working, instilling a new confidence in France's financial future. He wasn't just managing money, he was changing the way an entire nation thought about its economic potential, demonstrating the power of circulating currency. But Law had a grander vision, one that went beyond just banking. He wanted to tie his paper money system directly to the national debt. His instrument for this? The Mississippi Company. Officially called the Compagnie d'Occident, this new trading firm was granted a monopoly on trade with France's vast North American territories, particularly the Louisiana region. Its shares were sold to the public, offering a way to exchange national debt bonds for company stock. The sales pitch for the Mississippi Company was truly legendary. Law painted a vivid picture of Louisiana as a land of untold riches. Gold mines, silver mines, fertile plantations, and abundant trade were all promised. These were largely exaggerations, of course, but the public, desperate for a way out of their financial woes, bought into the dream. The allure of quick wealth from exotic, distant lands proved irresistible, fueled by Law's persuasive rhetoric and a government seemingly endorsing it. Law offered company shares in tranches, first to holders of government bonds, allowing them to exchange their depreciated debt for what promised to be a golden opportunity. As demand grew, more shares were issued, each time at a higher price. This cleverly linked the perceived value of the Mississippi Company directly to the public's willingness to convert the national debt, simultaneously reducing state obligations and funding Law's grand colonial venture. The Mississippi bubble began to inflate. People flocked to buy shares, convinced they were on the verge of immense fortunes. Prices soared. Shares that started at 500 livres quickly jumped to 1,000, then 5,000, and eventually over 10,000 livres. The phenomenon gripped Parisi society, drawing in everyone from impoverished servants to powerful aristocrats. It was a gold rush, but instead of digging for gold, people were chasing paper. The epicenter of this frenzy was a narrow street in Paris called the Rue Quincampoix. This was the informal stock exchange, packed day and night with speculators. Fortunes were made and lost in moments. Stories circulated of sudden riches, like the hunchback who rented out his back for investors to sign documents on, earning a fortune. The sheer speed of wealth creation was intoxicating, pulling in even the most cautious citizens, convinced they couldn't afford to miss out. Thousands became instant millionaires, dubbed Mississippi millionaires. Servants suddenly owned carriages, and ordinary citizens indulged in unheard-of luxuries. The social order itself seemed to turn on its head. This was unprecedented wealth creation, at least on paper. Law himself became the most powerful man in France, effectively controlling both the National Bank and the largest trading company, a true economic dictator. With his influence at its peak, Law merged the Banque Générale with the Mississippi Company, creating the Compagnie des Indes. This meant the same entity was now responsible for issuing all of France's paper money and managing its colonial trade. He had essentially put all of France's economic eggs into one highly speculative basket. This consolidation was meant to solidify his control, but it also dangerously intertwined the fate of the national currency with a single volatile enterprise. As share prices climbed higher, they became completely detached from the actual sparse revenues of the Louisiana colony. To maintain the illusion of growth and to fund the continuous demand for shares, Law's bank printed more and more paper money. This unchecked issuance of currency inevitably led to inflation. Prices for everyday goods began to rise sharply, eroding the purchasing power of the very paper money that was supposed to bring prosperity. Some shrewd investors, recognizing the unsustainable nature of the bubble, began to sell their shares and convert their paper money into gold, silver, or tangible assets like land. They smelled trouble. One famous example is the Prince of Conti, who exchanged a massive sum of Law's notes for gold. Law tried to stop him, but the prince defiantly loaded the coins onto 3 wagons, openly challenging the system's stability. These actions, coupled with growing doubts, triggered the beginning of the end. A major wave of panic selling hit the Rue Quincampoix. Share prices began to tumble, and investors desperately tried to convert their paper money into hard currency. The illusion of infinite wealth was shattering, replaced by a growing sense of dread. The once jubilant crowd now showed signs of fear, pushing and shoving to offload their depreciating paper. The French government, under Law's guidance, tried to intervene. They issued decrees aimed at propping up share prices and forcing people to use paper money. One decree prohibited citizens from owning more than 500 livres in gold or silver. Another tried to fix the value of paper notes, making them legally equal to specific amounts of metal. These desperate measures only fueled public distrust, proving the artificiality of the system. Then came the most devastating blow. In May of 1720, a new decree was issued, drastically devaluing the Mississippi Company shares and the banknotes themselves. This was an admission of failure. The government essentially admitted the paper money was worth less than it claimed. This instantly destroyed public confidence and confirmed the worst fears of the skeptical, triggering a complete and utter collapse. Public trust, once so easily won, evaporated overnight. The paper money that had once been welcomed was now rejected. Merchants refused to accept it, and people feared being left with worthless notes. The entire system, built on confidence, crumbled. The streets of Paris, once buzzing with speculative fervor, now echoed with the cries of ruined families. The dream of quick riches had become a nightmare. Riots erupted. Angry mobs besieged Law's home and the offices of the bank. People who had once celebrated him now sought his head. The Rue Quincampoix became a scene of violence and despair. Many speculators, facing utter ruin, committed suicide. It was a complete societal breakdown, fueled by financial devastation and the bitter taste of betrayal by a system that had promised so much. John Law, once the most powerful man in France, became a hunted figure. He was forced to flee Paris in December of 1720, escaping disguised in a carriage. He eventually settled in Venice, where he returned to his old profession of gambling, a sad end for a man who had tried to revolutionize an entire nation's economy. His grand experiment had failed spectacularly, leaving France in ruins. The Mississippi bubble burst, leaving widespread economic ruin. Many wealthy families were impoverished, and the middle class saw their savings vanish. The French economy was set back by decades. Perhaps most significantly, the experience instilled a deep, almost pathological distrust of paper money in France. For nearly a century, France avoided adopting paper currency, sticking to gold and silver, a direct consequence of Law's failed experiment. The consequences went beyond economics.
The scandal shook the very foundations of the French monarchy, eroding public confidence in the government's financial management. It contributed to a growing dissatisfaction with the elite, a sentiment that would fester for decades, eventually contributing to the French Revolution later in the century. The echoes of this financial collapse resonated for generations, shaping the nation's future. So, what did we learn from John Law and the Mississippi Bubble? First, that while financial innovation can be powerful, it must be grounded in tangible value and sound economic principles. Second, that unchecked speculation, driven by herd mentality and unrealistic promises, inevitably leads to collapse. And perhaps most importantly, that trust, once lost in a financial system, is incredibly difficult, if not impossible, to regain. The story of the Mississippi Bubble stands as a stark reminder that printing more money doesn't automatically create more wealth. True prosperity is built on productivity, sound governance, and the unwavering confidence of the people in the underlying value of their currency. This foundational truth about money, finance, and human nature remains as relevant today as it was 3 centuries ago. John Law's grand experiment was a dramatic illustration of what happens when a nation tries to print its way to riches without a solid economic foundation. It's a timeless cautionary tale, showing us that while money can change forms, its fundamental value always depends on trust and the real wealth it represents. What other financial bubbles do you think were similar? Let us know in the comments below, and thanks for watching.